Yeah, what's good, guys? Welcome to another video. Welcome to another episode of me talking about my strategy, which is the soft model 2.0. Now, in my previous video, I already told you guys why or how I came about this particular trading system and why I did quit using smart money, some of the challenges that I normally face in the markets. Like I said in the previous video, not that smart money doesn't work, but I just found so much simplicity in this strategy. No overcomplicating things. No, like, I don't really know how to say it. It's just the simplest way you want to trade. So in this video, I'm going to talk about entries. All right, how to take entries in this using this strategy. Now, these are two trades on Solana. As you guys know, I trade Solana very well, and these trades actually this particular one over here was a trade I missed, but I still came to the chart to map out this trade because I'm also adding it to my data in terms of the win rates and also Q zones and time that I normally see these setups using this particular strategy. So but this particular trade over here is the one I took few hours ago. I think I have, so this is when I took this particular trade over here, as you can see, when Solana was around 210 USD. So that one hits TP. Now there's another trade also which I shared in my private community. It is not yet, it hasn't hit TP yet. This is Monday, so the market is a little bit slow, but it's still the same strategy. This is a trade I shared on silver. Yeah, I might be saying, oh, you trade gold. Why are you not trading silver? Well, there are certain things I noticed about the market and a lot of stability I noticed in silver compared to gold on the 5 minute time frame. That is why I am gradually switching over to silver instead of gold. Still the same volatility, but there's a whole lot of difference. All right. So I'm not saying you should start trading silver, but yeah, for me, silver is killing it compared to gold right now. Now, this is the trade over here when I shared it. So everything I'm showing you here, they are not just based on hindsight. It's actually trades that I've taken that I've shared. So now let's head over to how to actually get an entry. So I'm going to use Solana as an example, right? Guys, subscribe to this channel. I'm teaching this particular strategy for absolutely free of charge. So all you need to just for you to rewatch the video over and over again. So what I'm going to do right now, I'm going to be removing all my drawings. Now, initially, if hadn't been this was when I used to use smart money and stuff like that, I will have to. It's like pain. It's like pain in the when you are trying to put up all the drawings and stuff like that, the break of structure, change of character, blah blah blah, this and that. But this is just simple, so I can easily. All I need is just to map out like 2-3 lines at certain time of the day, and I can get started. All right, and wait for a setup. So basically, what I did, right, the trade, this particular trade over here, like I told you, I missed this trade, but I'm going to show you what it will look like for you to catch that particular trade. So let's just assume, guys, I'm using the free version of TradingView right now, so I won't be able to replay on the 1 hour or 5 minute time frame. Now, another thing, or one of the most important thing I want you to pay attention to before you start looking for mapping your necklines, all right, you need to know your trend. You need to know your trend. Identifying your trend is the most important thing. If you don't know your trend, then it simply means that you are definitely going to end up trading against the big boys. You don't want to trade against the banks. You don't want to trade against the big guys. You don't want to trade against the whales because they are the ones that run the market. So when you know the trend, that is when you know where the market is heading to and if you should be buying or if you should be selling. All right. So, and the trend you're going to be using, right, it depends on whether you are a day trader or whether you are a swing trader, whether you're a scalper. Now, as a day trader, what I focus more is the 4 hour trend. If I'm swing trading, I'm focusing on the daily, then sometimes the 4 hour for necklines, but I focus on the daily. But this is actually a day trade. So what I want to focus here is the 4 hour trend. Now, if you take a look at the 4 hour trend, now this is where it gets a little bit tricky. you might see that okay, the market is trending down here, but the overall trend of the market, as you can see, is bullish on the 4 hour time frame. So what you want to be looking for are buy opportunities. So you want to be looking for necklines that will support, that will act as areas of support to your trade, all right, so that you can buy. So what I do is that if I'm day trading, I mark out my neckline on the 1 hour time frame. Remember, I told you if I'm swing trading, I mark out the neckline on the 4 hour time frame. So since I'm day trading, mean I want to close that trade that same day, or maybe hold it for just within 24 hours, then I just have to mark out my neckline on the 1 hour time frame. So this particular trade, which I showed you over here, now when price got to this zone over here, let's assume this price action has not printed on the charts yet. What I did was to mark out three key zones or three next necklines where you are expecting price to retrace to, then continue. Remember, all you are waiting for, all you are looking for is areas where price could bounce from. All right. So you look for the closest neckline. You don't go looking for necklines in this area. All right. So you look for the closest neckline. Now the closest neckline is over here. I think okay. The closest neckline over here is this one right here, which is actually where the price later bounced from. Then we have another neckline over here. Remember, like I said, like I said, focusing on just three. So what I do, I just mark out three levels where I'm waiting for price to retrace to. Now, the reason I mark out three levels is because of the way I budget my risk management. Now, what I mean by that is that in a day, as a day trader or day trading using the system, I don't plan to lose more than 3% of that account. So what that simply means is that if it gives me setup in the first level here, I take the trade, risk 1%, target 1 to 2. By the way, 1:2 is the best risk to reward if you're using the strategy. Though depending on which time frame is your entry. But for me, my neckline for day trading, like I said, neckline for day trading, you can call it points of interest or line of interest, whatever you want to call it, doesn't really matter. So let me just say my POI, because POI simply means where you are expecting to get set up from, or where you are expecting to take entry from, or where you are expecting the market to bounce from. So POI, I normally use the 1 hour time frame. Now for my entry, day trading, all right, day trading, I go for the 5 minutes time frame. Now, sometimes depending on the market structure on the reaction, all right, these things you don't really just get to master it overnight. I didn't master it in a single week or in a single month. It was weeks and weeks of use of live testing. So sometimes the market structure on the 5 minute time frame might not give you a good risk to reward, or might not give you an early entry. So you might want to go down to the 3 minutes time frame. So these are after I might have identified my trend on the 4 hour time frame, right? The only time frame I now focus on is the neckline zones I'm going to mark out on the 1 hour time frame, then the 5 minutes entry. So as you can see over here, after marking out those 1 hour neckline, all I needed to do was now go down to, first of all, like I said, the 5 minute time frame. So when you go down to the 5 minute time frame, let's see what price did when it goes to the 5 minute time frame. Now you can see that when price came and tapped into that 1 hour neckline, it gave us a change of character. Now the entry here is when you now use whatsoever means you want to use in entry. Now you can use candlesticks pattern, you can use engulfing candles, you can use morning star, you can use evening star, then you can use the smart money, break of structure, change of character kind of entry. So but in my own case, what I normally do is that since I'm already using neckline as my trading system, I focus on the last neckline that was created on the 5 minute time frame before price taps into that 1 hour point of interest. In this case, this is the level. So what I want to do is that I want to see price close above this area. Now remember, if you're using normal smart money concept, price will need to close above this area to give you change of character. You see the reason why I said I'm no longer using smart money concepts. Now you need price to close above this area. Now they will tell you that you will need price to close above it, give you change of character, then retrace maybe down to the discount zone, then before you can take a trade. But in reality, most times, a lot of times it's not going to happen. You're not going to get that retracement. All you need to do, the way I do it, is wait for price to close above the last neckline. All right, after price might have tapped into that 1 hour points of interest, then just take your trade. Now, another key way to confirm if this is your entry is when you have series of fair value gaps before price closed above this particular neckline over here. So this is where you want to take your trade. Now you can decide to wait for price to close above this area so that you can get a clear, a better, a more confirmed entry, or you can just simply enter here. So you can see that once you enter this trade over here, this is actually something that happens today, guys. So I'm not just going back into the chart looking for something that will suit what I want to say so that I can teach you that. No, I'm teaching you exactly what happened in the chart. So as you can see over here, like I said, 1 to 2 restore reward. Now, it took me months to understand that you don't necessarily need your 1 to 3, 1 to 4, 1 to 5 to be profitable. Even 1 to 1 with 55% win rate, you are still profitable. So, but if you have a system like this that can give you 1 to 2 restore reward, guy, just focus on 1 to 2. Once it hits 1 to 2, wait for the next day to take it. Like for me personally, the maximum amount of trade I can take in one pair using this strategy in a day is just 2. That's the maximum, because there's what I call Q zone. There are certain times of the day when I expect to see these kind of setups. So, but I'm going to make another video concerning that. So, but today is just about entry. So as you can see, this entry was successful. 1:2 restore reward locked in. Now let's see how I got the second trade. So price now got to this level. So once price got to that level, what do? Go to the 1 hour time frame. What are we now going to do on the 1 hour time frame? Now, what we now do on the 1 hour time frame is to adjust our points of interest or our 1 hour neckline, because price movement is dynamic. So you don't just say, okay, because you've marked here and price has reacted, that's the reason why this line should continue to be there. No, like I said, where the price, as you can see over, when price hits TP here, you look for the next 3 key levels. All right. So in this case now, the next 3 key levels is this one over here. Now, this one over here was a key level as well. Now, this is what I call a reverse neckline, but that's going to be a video for another day. So, reverse neckline, I normally use it for liquidity strips, or when I'm anticipating a liquidity strip. So in this case now, as price hits TP of that first trade, now what am I expecting for price to do? I'm expecting price to do 3 things: either tap this area, then pump from there, or come down, tap this area, pump from there, or come down, tap this area, and boom. Now remember, like I said, the trend. So you are not yet going to go. Now notice one thing over here. When you enter this trade, you had necklines over here, but you not say, okay, because there's neckline here, let me start to look for sell opportunity. No, because you are working with the trend, and the trend is bullish. So that is why you are still looking for buy opportunity, not sell opportunities. So after price started retracing, now let's see what price did on the 5-minute time frame when it got to that first neckline. So let me remove this trade since that has been. Now when price got to the first neckline over here, which is this zone over here, right? Which is this particular one over here, you can see. Let me remove this other one here. I hope my mic is on. Okay. So when price got to this level over here, remember I told you something, that what I want to see, right, is for price to close above the last neckline. in my entry time frame. As you can see, price came, it did not close above it. So that simply means that this level did not hold. Then I remove it. Now, what am I expecting? You see, one thing with the market is that markets don't just reverse from anywhere. There must be something, not just fundamental, but technical, all right, that is making it reverse, especially when you're trading metals like gold and silver. They don't just reverse from anywhere. They reverse from key zone where there have been recent or frequent reaction in the markets. All right. So since I already know that that first level is not going to hold, whatever is happening here, I'm not interested unless price comes and closes above this area. But as long as price is below this last neckline over here, I'm expecting price to come down to this level and give me a setup, which is my next point of interest. Now, as you can see, price came over there. Now, where is the last neckline? Right here. So all I needed to do was to see price close above this neckline. I don't need change of character, break of structure, whatever. Right? You can still use it if you want to. Now, as you can see, price came. This particular candle that closed above it, that was my entry. That was the trade I took this evening. Now, stop loss is just below this area. Targets how many risk to reward? 1 to 2. Simple as that. So we target 1 to 2 over here. As you can see, boom. That was all. That was all. So that's basically how entry. Now, what then happens to this particular line? The line will still remain there until price creates more neckline. All right, let's say for example the price does not come down again, then we'll continue to see price. Then you mark the new necklines as your points of interest. If it does not give you setup on any of them and starts coming down, then you know that okay, it's coming down to this level to give you another setup. It's as simple as that. It is as simple as that, guys. So that's basically how to take entries using this particular strategy, guys. All right, it's very simple. So if you love this strategy and you've been if you've been trying it out in your trade, let me know, guys, in the comment section. All right, take care, guys, and do have a lovely trading week ahead. Bye.